that I've created now 3 or 4 years ago is called Aryze, and we're creating what we call digital cash. We want to create a digital representation of sovereign cash money, like a $100 bill, a digital representation that can operate on different systems and blockchains and different banking systems.
Okay, so both the sort of old world, the financial systems, etc., the existing system in place, and on blockchains, the new fancy technology. Because the way I normally like to see it is that you have centralized databases, basically. The financial systems, you have JP Morgan, you have Bank of America, whatever bank it is, they have their own siloed system, they maintain that. And actually, ironically, they normally use some open source technology in there to build their siloed databases and systems.
Because it's often better.
Yeah, exactly. And then there's the new worlds that Bitcoin has pioneered with blockchain, basically distributing data across a network, which needs to be maintained by miners or what have you, depending on the consensus mechanism. But Aryze is actually, or is building a bridge, you can say.
Yeah, exactly. That's the phrase we use as well. We're saying we're bridging the gap between the world of finance and the world of crypto. Essentially, we're breaking down the silos, because we can create an online bank, an online banking system, but it's yet another silo. It only works within our system and our framework. But in order to create true programmable money, means that its movement needs to be controlled or facilitated by a platform which is not ours, an open platform. So if we take Ethereum, for example, you can have the JP Morgan coin, you can have Facebook Libra, and you can have a third stable coin, it's called, transferred on the Ethereum blockchain. So you can actually transfer a JP Morgan dollar on an open source blockchain. Now, what Aryze wants to create, and again, it's called digital cash, is because what you would be able to transfer, the electronic dollar, the digital dollar, or whatever we end up calling it.
Sure.
It is not like a JP Morgan coin where it's an IOU representing a dollar deposit that you keep with JP Morgan. It is a digitalization of actual cash money. And there's a vast difference between bank deposits and cash in your hand.
Right.
Besides, one is digital and one is a piece of paper. But the piece of paper is actually more secure in the sense of credit risk. It has sovereign backing. It has government guarantee. $100 bill will forever remain a $100 bill.
Right.
Forever. Right. So,
until the Fed goes down, or the US wants to apply a new standard, or whatever might happen.
Whatever might happen. Some things do happen, but in the case of global finance and global trade, the dollar is still a very active element of that, and in use, and there's somewhat a lot of trust in the dollar. Yeah. But as soon as you take a $100 bill and you deposit it into a bank account, it becomes the property of the bank.
Right.
And what you receive in return is kind of a debt instrument. They owe you now $100.
It's an IOU, right?
It's an IOU. Yeah. So the bank now owes you $100. Yeah. But that can change. That has changed. Banks, they do go bankrupt. Right. Banks, they do commit fraud, from the smallest to the biggest bank, as we apparently see also from Denmark. Right. And there's a lot of analog activities associated with the way that banks, they handle customer money. But most importantly is the fact that they take on risk when they offer credit and lending activities to businesses and retail and regular folks, right?
Right.
So whenever you go into a bank account, into a bank, and you want to borrow $10,000 to buy a car, well, that doesn't mean that somebody has put in $10,000 into your account and now that money is yours. You have the bank, which has a permission that based on a fraction that they keep in the central banks, they are allowed to print kind of add money to the money supply. Right. Thereby, the bank. That's why the banking system is called a fractional reserve banking system. That's how it operates. That's how banks operate today.
Right.
You take roughly out of $100, you put roughly $10 in the Fed, and you use $90 for lending.
Right.
That's what it means to be a bank.
Right. So $100 deposit becomes much more than
Absolutely.
100. It becomes 10 times more.
So you lose its ownership of it, and you rather trade the ownership of sovereign cash money to a part of the bank's promise. Like it still has value. It's still a bank. It's still a promise from a bank.
Right.
but it doesn't exist physically one-to-one like cash does. So what we're building is a banking environment where we'll be able to take on deposits from clients and businesses, and kind of like a zipper, when you close a zipper, we rebundle fragmented money. Meaning when we get $100 deposit, say from a bank account, and it is transferred to us, we receive that transfer, but we don't do any lending and we don't create any credit. We place those funds back into the central banks where they're initially printed.
So no fractional reserve, like you.
No, that would enter
one-to-one basically.
Yeah, exactly. That would be that would be full reserve banking. Right?
Yeah.
The concept of full reserve banking.
Right.
In today's terms, we use the words central bank digital currencies. That is essentially what when we're talking about central bank digital currencies, like happening in China, like Fed coin, like Euro chain, like all these things that we're talking about, conceptualizing, is essentially a way of looking at that issue. But the way that stable coins operate today, like the JP Morgan coin, like the Tether dollar, like all of these stable coins on a blockchain, well, they all have the same kind of credit risk or even worse credit risk than they would have if you just had the money in a bank. Okay. So it's a part of making money programmable. Right. But what you're making programmable is not actually money. It's an IOU, a bank IOU. Right. And in the case of, for example, Tether, there's been a lot of controversy around how they keep their money safe, which banks they use, and how they actually prove their solvency, and
have they proved it? Because there's still some.
I do not know the details of their conduct, to be honest, and I don't want to badmouth anyone in the space, but I know that it doesn't follow the standards that you would expect from Bank of America or JP Morgan, or they don't follow the very strict regulatory clearances that are needed in order to operate those kinds of services. Right. And there are plenty of ways how you can use Tether to launder money. Like, so it's not a great thing, but it's a step towards making money more digital. Right. So the JP Morgan coin on Ethereum, it can be used on Ethereum. It's really smart, and you can transfer it. You can transfer it from A to B using only gas and miners. That's really cool. You can break those silos.
The JP Morgan coin, is that just a stable coin to dollar? Like
it is. It is. It's a dollar deposit with JP Morgan. Right. What we want to do is create something similar to that environment. We want to make dumb money smart. We want to make analog currencies digital. But we want to take it a step further, saying, well, similar to cash, deposits kept with Aryze should be owned contractually by the depositor. Okay. The bank
is not. You're not a bank, basically. You're
essentially
facilitating the transaction.
We would need to operate under licenses that are given to banks. Okay. But the definition of a bank is a financial institution that is permitted to offer credit and lending. Yeah. We just don't. Right. We need to become somewhat a bank to obtain the relationship with the central banks that are needed for us to actually offset the credit risk into central bank deposits. Okay. So we're kind of becoming a bank, but not in the traditional ways that banks work. We're creating a full reserve bank. And an important part of this is saying, well, now we have a deposit with us. It is owned by the bearer, meaning it's your deposit, it's a bearer instrument. So you contractually own the actual $100 that we keep. Right. That means if Aryze should go bankrupt or go away or do anything, the money exists. Right. The underlying deposits are still kept in central bank deposits and reserves and treasury bills or other instruments that have government.
You hold your own keys, as we normally say in blockchain and crypto.
Yeah, but not in this model. It wouldn't be as literal as in the world of crypto. Right. You would have an account with us, an online bank, and you would have some rights. And in the case of Aryze's disappearance, there will be processes where you, through legal channels, can obtain and prove that the money is yours and then claim it. Okay. However, one thing that's really important here is step one is building a full reserve bank, integrating with the world and the banking ecosystem that are in place, and being able to accept deposits and offset risk with central bank deposits. However, once money is fully digital and fully backed, we can then we have built a mechanism so we can issue or mint IOUs on third-party ledgers. So if a client wishes to use Ethereum, if a client wishes to use Stellar or Neo or Tron or whatever blockchain may be of interest for that individual client, they can then issue cash onto their preferred ledger. And that enables tons of opportunities for customization.
So you're agnostic in a sense to what blockchain people want to
I'm
have.
as agnostic as an ATM. When you take money out of an ATM, nobody decides what wallet you keep it in.
Right.
Like you decide what wallet you want to use. And if Mask wants to use Ethereum for something, if Tradeshift wants to use Stellar for something, if an Asian company prefers to use Neo for something, or they need liquidity on Tron for something, they should be able to issue cash onto whichever platform they wish to use. Now, in our banking environment, our app is called MaMa. It stands for Multi-Asset Modular App.
Right.
Now, that's a really cool and like modern payment app inspired by the way of doing things in Denmark. We're one of the most digital countries in the world. 95% of the Danish currency is digital. And we kind of know how it's done in a smart and seamless and sexy way, right? A modern solution. So this application in itself will be used by a lot of people. It will so because of its modularity and customizability, and there's a bunch of cool aspects of the app. But the essence of it is that it is where digital cash lives, and it is where digital cash can be sent to other places from.
Right.
But we need to create incentives to keep the money in the MaMa ecosystem, rather than withdrawing to PayPal or withdrawing from an ATM or whatever it may be.
Right.
So by having the interoperability feature to blockchains, we can actually take solutions that live in the world of Ethereum and offer them to the users of MaMa through what we call modules. So we can look at what's out there in the regulated world of lending and finance and coins and rewards and travel cards and whatever, but we can also look into the world of blockchain and staking solutions and distributed apps and all kind of innovative stuff that happens, and make those solutions available as modules to users of MaMa. So we are truly bridging the gap between the world of crypto and the world of traditional banking. And the interoperability aspect of the minting IOUs onto third-party ledgers, that mechanism is a really important part, but it's not an obvious part. You'll just be able to do cool stuff, or my mom will just be able to do cool stuff that she couldn't do before, like maybe receive 5% interest on your deposits. Like what banks give her interest? Well, we could do that. We can create a mechanism where we benefit from the world of staking and investing and peer-to-peer lending and all kinds of cool solutions that exist in the world of crypto. And we can apply it and offer it to regular folks who just uses the MaMa app. And suddenly we can offer things like, get interest on your deposits. And that's amazing in a country with negative interest rates like Denmark. But things like these, and then if people want to know how does this work, naturally they can go and read. But today, if you want to do that, you need to get an Ethereum wallet, connect it to some, say, MetaMask, and through that use some kind of third-party system or access a distributed app where you can stake and exchange and trade. And, try using Uniswap if you're a regular person. It's difficult. But we can make those kinds of concepts available for the masses. And that's why MaMa and its payment ecosystem will, be able to compete on a very high level with the other payment apps like Revolut and stuff, because it has a modular approach where communities will build modules and extensions, and the core application in itself is based on government money with no risk.
So it's a little bit like